Seen, no ear has heard, nor has it ever entered into the heart of man what God has reserved for those who love Him. In Bible-type love, hot, fiery love for God. The eyes of unbelief see nothing but difficulty and defeat. The eyes of faith, yeah, there are giants in the land, but they're unprotected. They're merely bread for us. If the Lord is with us, we'll go in and possess it at once.
No matter where you go, God will surround you. The Lord will go before you. God will protect you. No harm and evil will come nigh to you.
God will give you power over the devil and power over sin and power over your flesh.
Tell the whole world over and over and over and over again that Jesus loves you with all his heart and he wants to save you and to save your life.
You understand, Jesus is coming, and sooner than most of you people think he's coming. I'm not just saying that to get you excited. I'm telling you, he's coming.
Let God be true and let every devil be a liar. Clap your hands, all ye people. Shout to the Lord.
He's able to give me a child. He's able to heal my body. He's able to provide for me.
2023 will be the year that the Church of the Lord Jesus Christ comes alive in the United States of America. I'm looking at the people right now that are going to make an impact. You're going to leave out of here today seeing life through the lens of faith.
Why should you come to RTBI? The education that you're going to experience here is like no other. You're going to get a solid foundation on the Word of God, but you're also going to be exposed to the power that comes behind it.
I was listening to Pastor Jonathan's sermon, and at the end of the sermon, he gave an altar call for those that feel a call into full-time ministry.
I decided to act and move and apply, and I got accepted, and I can assure you that this Bible Institute has taught me so much. They teach you the Bible, and they teach you the true, full gospel.
The fire of God is coming upon teenagers, college students that say, I don't care about the approval of Viacom and MTV and the movies. I've made up my mind. I'd rather endure the shame and disgrace of this world and have the pleasure of God.
And on that floor, I cried and I cried and I said, Lord, I know that you hear me. And the Lord spoke to me and said that if I won't move here because of fear, I will never go to the nations, because how much more will I yield to fear then? And in that moment, I knew that my life isn't going to be ordinary. In that moment, I knew that it was up to me how far I'm going to go with God, and that it's up to me if I'm going to make this decision. It changed my life forever.
First, I'm going to be strong in the Lord and the power of His might. So congratulations again for being what's right with America. There's enough principled people full of God's fire in this room to shut down every plan of the devil for this generation. You'll do what God's called you to do and be who God's called you to be for the rest of your life.
Hello, Brother Jonathan and Sister Dallas, everyone who's a part of Revival today. This is Stephen from Feed the Hungry. We're so grateful for your partnership. Together, we're reaching almost 450,000 children in 24 nations of the world, answering the prayer of those who cry out, Lord, give us this day our daily bread. That food is a little key that opens up great big doors, and the gospel is gaining entry into hearts, homes, and communities amongst every people group that we're reaching. The kingdom of God is being established and built, and we're able to expand into places where there's great need, like in Karamoja, a part of northeastern Uganda, right on the border of South Sudan and Kenya. A tremendous famine is taking the land. Thousands of people are dying on a monthly basis, especially the marginalized, the elderly, the infirm, and the very young. We were able to reach out into this particular people group, the Karamojan, who are unchurched and unreached, bringing food and bringing the gospel that's impacting their hearts and lives. Pastor Solomon, our man man in Uganda has been diligent, sacrificially going up week after week to bring food and to do the hard work to see the church rise up in this desolate place. We can expand and we can grow and we can answer these cries for help because of friends like you. And we are so grateful for all that you're doing. May the Lord bless you and keep you. May his face shine upon you, and may you do more than ever before in Jesus' name, because of your care for the hungry, because of your compassion for those in need.
Coming to you from Main Street, America, Steel City in the heart of Rust Country, and the home of industrial titans like Carnegie and the Mellons, we are bringing you market analysis, news, and everything you need to know about the economy and investing. Live from Pittsburgh, Pennsylvania, it's Check the Market.
That was Morgan Freeman's twin brother doing our intro for us there. Welcome from the brand new studio. This is Check the Market, live Tuesday mornings at 9 a.m., 9:10-ish. How's everybody doing? How was your weekend? How has your trading been this last week? I wasn't able to be with you last week, but we're back now. And we've got some interesting things that we're going to cover today. Most interesting, the power of the shareholder. We'll get into that here in a little bit. Sandra, good morning. Wayne from Florida, no longer in Buenos Aires. He's in Florida today. Our resident globetrotter, welcome. Let me know where you're watching from. Dean from the Rocky Mountains of Colorado. It's a great looking studio. I like this new setup. I really do. It does. It looks good. The background is nice too. I really like that. With the sunrise over Pittsburgh there. Dare I say, the new Wall Street. Thank you, Wayne. Let's take a look here. Pre-market, stocks are down. Looks like they're actually getting hammered here a little bit. Well, no, not that bad. Dow Jones futures down about 29, S&P down 3.75, and NASDAQ futures are down 15. Oil is down as well. We'll get into all of that here in a little bit. Sarah from Corpus Christi, thanks for tuning in. Scott from Iowa. And Mindy from Tulsa, Oklahoma. Welcome, everybody. Make sure you share the broadcast. Let's get everybody who's into some stock market investing, or anybody who wants to invest, get them watching the show, or we bring you market analysis, news, stock picks, etc. All right, let's get into the first article this morning and see what's going on in the world of investing and finance. This is from Yahoo Finance. Stock futures drift lower, oil loses more ground. Stock market news today, which oil losing more ground is it's good news and bad news. Bad news if you're an investor in energy companies. Good news if you drive long distances every single day. Let's take a look. U.S. stock futures were trading slightly lower on Tuesday morning, with contracts on the S&P and the NASDAQ down less than 0.1%, while others on the Dow Jones slipped 0.13%. Everything is less than 0.1% right now as it stands. Continue. There's the chart. Continue. In the commodity market, wheat prices soared as much as 3% after Ukraine said Russian forces had blown up a giant dam in the country's south, posing supply concerns for the Black Sea grain trade. Meanwhile, oil continued to fall as optimism over Saudi Arabia's plans for an extra million-barrel daily cut in crude output faded. WTI crude futures dropped 2.5% to $70.36 a barrel. Right now, 70.63, 70.60 a barrel, while Brent futures fell 2.4% to 74.91 a barrel. Treasury yields fell after the U.S. government on Monday started to issue a wave of Treasury bills to rebuild its cash pile, which had been nearly drained over the last few months. The issuance of new bills could impact liquidity in financial markets and could have an adverse effect, according to investors. The yield on the benchmark 10-year Treasury dipped to 3.66%, the 2-year to 4.44%, and the 30-year bond traded down to 3.87%. Continue. In other news, investors are still digesting events at Apple's Worldwide Developer Conference on Monday. The tech giant introduced its most ambitious hardware lineup in years, including a highly anticipated mixed reality headset, Apple Vision Pro. Apple shares ticked down slightly to 178.69 in pre-market trading Tuesday after losing hold of a record intraday high of around $185 a share on Monday to end lower. Sentiment elsewhere in tech remained upbeat, with the shares of Unity Software climbing more than 3% in pre-market following a shout-out during the Apple event. GitLab shares surged 26% after the software company posted an earnings beat in the first quarter while providing positive guidance. Let's talk about Apple there for a little bit. They came out with this mixed reality headset. How many of you think that's going to be something that is going to catch on? How many of you think that's not going to catch on? It's $3,500 for this mixed reality headset that you put on, and it basically acts like a computer. You use your mouse, you use your finger basically as the mouse, and you open apps just by clicking in front of you. If the entire office got that instead of computers, it would be interesting to see everybody just clicking around in front of them. Jake likes it. Jake, would you get it? Yeah, beginning of next year is when it comes out. He said he wouldn't get it yet. Probably needs to mature a little bit. But it's interesting that Apple did come out with that headset, as well as a 15-inch MacBook Air and iOS. What are we now at? 17? iOS 17 as well. I don't think it was that big of a lineup of things that they came out with. Basically just the headset. Continue. We can go to the next article. That's basically it for pre-market this morning. Now, this is interesting. The SEC, this is just from this morning. SEC sues Coinbase over exchange and staking programs. Stock drops 15% pre-market. Can you go, don't go to the article, go to the next headline. This was from yesterday. SEC sues Binance and CEO Changpeng Zhao for U.S. securities violations. So 2 days in a row, the SEC sued basically the two biggest cryptocurrency exchanges. Let's go back to the Coinbase one. Let's take a look at it. The Securities and Exchange Commission sued crypto exchange Coinbase in New York federal court on Tuesday morning, alleging that the company was acting as an unregistered broker and exchange and demanding that the company be permanently restrained and enjoined from continuing to do so. Shares fell 15% in pre-market trading Tuesday. Coinbase stock had already fallen 9% on Monday after the SEC unveiled charges against rival crypto exchange Binance and its founder Changpeng Zhao. Continue. Coinbase flagship prime brokerage exchange and staking programs violate security laws. The regulator alleged in its complaint the company has for years defied the regulatory structures and evaded the disclosure requirements of U.S. securities law. The SEC has alleged that at least 13 crypto assets available to Coinbase customers were considered crypto asset securities by the regulator. Those assets include Solana, Cardano, and Protocol Labs Filecoin. We allege that Coinbase, despite being subject to the security laws, commingled and unlawfully offered exchange, broker-dealer, and clearinghouse functions, said SEC Chair Gary Gensler. Said in a statement. Great sentence. Coinbase did not immediately respond to a request for comment. Coinbase Institutional Service Prime, its retail exchange product, and its self-custody wallet service all offered one or more crypto asset security, the SEC said in its complaint. I think this is all interesting, and you all know that I'm not a big conspiracy theorist. Well, I probably have become more so in the last couple of years, but it's interesting that the two largest cryptocurrency exchanges are being sued right before the July offering of the FedNow service. I don't want to say it has anything to do with it, but why wait till now? You could have sued them last year when they sued a whole bunch of others, but they're doing it now. So it's interesting. And then yesterday, what this causes is a whole bunch of people will take their money out of those exchanges and put them on other exchanges or put them in their cold storage wallets, and that could potentially cause an issue for those exchanges. Let's go to the next one, see what they're doing wrong. They did some wild accusations with Binance as well. Let's see the article. The Securities and Exchange Commission filed 13 charges against Binance, the world's largest crypto exchange, and its founder Changpeng Zhao, alleging both commingled billions of dollars worth of user funds and sent them to a European company controlled by Zhao. The US regulator alleged on Monday that Zhao and his exchange worked to subvert their own controls to allow high net worth US investors and customers to continue trading on Binance's unregulated international exchange. One senior executive allegedly told a compliance officer that the company was operating as a unlicensed securities exchange in the USA, bro. One senior executive, that's literally what he said. It was operating as a blanking unlicensed securities exchange in the USA, bro. All right, cool. My goodness. So that's what they went on. Some finance bro in his vest, which I have vests. Nothing wrong with vests. In his nice little vest, telling them that they're unlicensed security exchange in the USA, bro. The complaint alleges that Binance created Binance US as a shield for the main company and Zhao to reveal, retard, and resolve law enforcement targets and insulate Binance. Continue. Two successive Binance.US CEOs expressed deep concern over Zhao's level of control. According to the SEC, both testified before federal regulators. Neither were named, but its first and second chief executives were Catherine Coley and Brian Brooks. I'm not actually the one running this company, and the mission that I believe I signed up for isn't the mission. As soon as I realized that, I left. A former Binance.US CEO identified as BAM CEO B testified to the SEC. Between June 2018 and July 21, Binance earned $11.6 billion in revenue, most of which came from transaction fees, the complaint said. Since its inception, the exchange has at first overtly and later furtively worked to entice U.S. customers at the direction and control of its founder, Zhao. Well, yeah, obviously, because cryptocurrency was giving way more percentages, way more return than any stocks were at the time, so obviously people are going to invest in it. And yeah, they're going to move money around the world because money is easy to be moved around the world when it comes to cryptocurrencies. They are just upset because it wasn't done on with their traditional means and ways. So now they're suing, and so we'll see what comes from this. They are the two largest, I believe, the two largest cryptocurrency exchanges in the United States, Binance and Coinbase. Next article. Good morning to you, Logan from Ruston. I'll have to take a look at that, Dale. BNB Tiger Coin, wealth transfer with TC. Is Palantir stock a buy on its artificial intelligence prospects? So this is a stock that I'm researching. I listened to a podcast and somebody was saying that they're very interested in Palantir for its potential future in the commercial markets. And so that's why I'm bringing this up. I know that it's been a meme stock at one time. It was a meme stock and people were buying it, but it does have some interesting uses, because what Palantir does is there's all these different systems that are talking to each other in companies, and they don't communicate with each other. So there's a software for this, a software for this, a software for that. What Palantir does through artificial intelligence is it takes all those software, all that data, and basically funnels it to where it's manageable. And so that's what they do. And they're very expensive. Their software is very expensive. So what it does, hopefully in the future they'll come up with something that's a little bit more manageable for more companies. But it does have potential in that space to become a very large company, and they are still fairly cheap. They still have a fairly cheap valuation. Good morning, Jeanette and Z. Good morning to you. Thanks for tuning in. This is Check the Market. Let's take a look at that article from Palantir, about Palantir. There's plenty for bulls and bears to hash out over Palantir Technologies. Bulls point to the improved profitability for Palantir stock. Bears focus on decelerating revenue growth. Then there's buzz over artificial intelligence stocks to consider. Continue. D from LA, thanks for tuning in. Corey, good morning to you. Palantir stock hit a 52-week high on June 1st as AI stocks continue to rally. Palantir shares have gained 126% in 2023, but shares still trade well below this software maker's all-time intraday high of $45, set in late January 2021. Palantir stock bulls point to artificial intelligence software as a growth driver. Palantir has already mined the AI opportunity with government customers for intelligence gathering, counterterrorism, and military purposes. At the AIPCon trade show on June 1st, Palantir Chief Executive Alex Karp discussed new powerful AI developments at the company. Karp says he's not sure when we should even sell this to some of our clients. Continue. I don't know what we should do with this, he added. Well, that's interesting. Will generative AI spur growth in the commercial market for Palantir stock? The software maker has expanded into healthcare, energy, and manufacturing. Generative AI could roil a host of industries by creating text, images, video, and computer programming code. Also, generative AI technology is already finding applications in marketing, advertising, drug development, legal contracts, video gaming, customer support, and digital art. Palantir stock, new AI platform in healthcare. Palantir customers possibly could use generative AI in applications such as drug discovery. When releasing its first quarter earnings, Palantir announced its newest offering. It calls the artificial intelligence platform. It'll begin rolling out to select new customers in May 23. The depth of engagement with and demand for our new AI platform is without precedent. CEO Alex Karp said in a letter to shareholders, "We are currently mobilizing our company and sales teams in order to convert this organic and inbound interest into an expansion of our reach within the market," which I think there is a huge market for this, because even regular organizations, they use different softwares, and there's software that you prefer. So you prefer one software for accounting, you prefer another software for your CRM, but those two softwares don't talk to each other. And what this will do is it basically bridges the gap to where you can pull reports, you can do all of those things. And so that's why I think this is interesting. And I think that it has a good commercial application. Obviously, it would have to come down in price for most companies to be able to afford this sort of software. The government is already using it, and the government, they never have anything that talks to each other, so this really bridged a gap that they had. So Palantir PLTR, take a look at it. I'm taking a look at it more in depth. I've been listening to people who are talking about this stock and its potential, and then also people that don't like the stock and why they don't like it. And one of the main reasons is that they haven't been able to convert a lot of commercial customers. It's still mostly government contract based. And so that's where the majority of their revenue comes from. All right, next article. Apple's Vision Pro is a technical marvel. Will anyone buy it? Let's see it. Certain products shift the way we look at technology, said Tim Cook, Apple's boss, as he unveiled the tech giant's latest gadget on June 5th, yesterday, the Vision Pro, a headset for virtual and augmented reality, whose development has been rumored for years, will be available next year with more than 5,000 patents. Apple dubbed the sleek glass goggles the most ambitious product we've ever created. It may also turn out to be one of their lowest selling. The company had reportedly hoped to shift sub 3 million units in the first year, but expectations have been scaled back. Some analysts now expect Apple to ship fewer than 200,000 units in 12 months, an order of magnitude less than any other big product launch. The Vision Pro's first iteration may be a commercial flop, yet it'll also be a first step on the way to do something that Apple hopes will be much bigger. Apple is always innovating. So what they're doing, I think, is they're basically showing us what the future of the computer will look like. Don't you think so, Jake? I think that's what they're doing. They always do away with something. And so what they're going to do is they're going to push this, they're going to continue to develop it until eventually they're going to stop selling computers, and this is going to be their computer. That's where I see this going. That you'll be able to create things with your hands while you're looking through the goggles. But at $3,500, I don't know how many people are going to be buying it just yet. Continue. Markets are open. Let me refresh the page here. Take a quick look at cryptocurrencies first, which are obviously, with the news of those lawsuits, are down, with Bitcoin down 4.55% at 25,506, below that $26,000 mark. Ethereum's down at 1806. Binance coin is at 274, down 8.49%. XRP is down to 50 cents, down 6.26%. Cardano 8.41%. Dogecoin down 7.59%. Solana down 9.62%. Whole market's just getting hammered. Avalanche down 6.14%. And the market as a whole is down 4.23% for cryptocurrencies. Just refresh here. Dow down 27. Down 36. S&P down 8.38. And the NASDAQ down 46.52. Let's take a look at oil. Oil is down 1.24, 1.77%, so still hovering at that 2% level there. And then gold, let's see where gold is. Gold is up slightly today, 1978.50. All right, let's continue. This was a tweet that I saw on Instagram the other day. From Rocket Mortgage, 1% down payment and private mortgage and insurance covered. Private and mortgage insurance covered. Get the home of your dreams with as little as 1% down, plus you won't have to pay for private mortgage insurance. This is a little scary. 1% down and no private mortgage insurance, which will lower your monthly payment, yes, but you might be buying more house than you can afford. This is giving 2008 vibes here, but it's a little scary. But yeah, that's what Rocket Mortgage is doing to increase their customer base there. Which 1% down wouldn't be too big of a deal because there are 0% down for houses that you can do, but the private mortgage insurance, oh, it's covered. So they cover it, I guess. Still scary. Continue. U.S. Treasuries blacklisted by German state as ESG law takes hold. So this is from the state of Baden-Württemberg, where I was born. Let's take a look at it. For an illustration of how wildly different the debate around ESG is in Europe and the US, look no further than the German state of Baden-Württemberg. Continue. One of the richest regions in Europe's biggest economy and the home of Mercedes-Benz Group and Robert Bosch, adopted a law this year that puts investing sustainability on par with more traditional criteria, such as profitability and liquidity. It's a decision that may affect as much as a fifth of the state's $17 billion of holdings, 17 billion euros, as it pivots away from ESG laggards. Few outside Germany paid much attention to the law when it passed, but it turns out the legislation has international ramifications. That's because the new environmental, social, and good governance filters have resulted in US treasuries ending up on an investing blacklist due to America's failure to ratify a number of treaties in areas including women's rights and controversial weapons. Other nations to be singled out by the policy include Finland, Latvia, and Greece. Isn't this is completely insane? So that German state, what they've done is profitability is just as important as environmental, social, and governance goals for a company, that's ridiculous. Because a lot of times those things are just a drain on money, a drain on finances, and they do nothing to build shareholder quality. They do nothing to build profitability in that organization. Continue. The bulk of BW's exclusions impact its equity and corporate portfolios. The law establishes the United Nations Sustainable Development Goals, the European Union's taxonomy, regulation, and the Paris Agreement on climate change as the basis for future investment decisions. The practical investment implications of the law are limited when it comes to U.S. treasuries because German states' holdings weren't significant to start with. In fact, German holdings of U.S. treasuries overall account for a tiny fraction of the market, or just 85 billion of the 24 trillion of outstanding debt, according to the latest data. And there's little to indicate that investors' ESG considerations in general have left any kind of dent on the U.S. Treasury market. Relying on international treaties to determine portfolio exclusions list is kind of a blunt approach. Arnim Enrich, head of BW's Treasury and Asset Management Unit, said in an interview, but it's the only proxy we have that is simple and objective. Yeah, then make it more complicated. You're just hurting people who rely on the pensions, who rely on the state pensions, and your money's going to go down more and you're going to have to tax more, and then more people are going to leave Germany. So have fun with your little ESG thing. Let's continue. We'll go to the next article. So Germany going that direction. Mind you, the German state of Baden-Württemberg is ruled by the Green Party. So that's who they've voted in. The home of Mercedes-Benz has voted in the Green Party, and they are now ruining that entire state. How your 401k savings are being used to turn your biggest brands woke, as revealed by ex-Anheuser-Busch exec, who shows how you can fight back at the cash registers. So, this is the power of the shareholder. This is what the title says today. The shareholder, most shareholders don't even know, most people who have 401ks, most people who have pensions don't even know the power that they hold. And companies take advantage of this. Companies like BlackRock, Vanguard, etc., that hold these pensions, that hold these mutual funds, these ETFs that you're invested in, they try to explain it to you on their websites, but most people don't know the power that they hold over their own investments, over their own finances. So that's what we're going to get into here a little bit today. Let's take a look at this article. Anson Fredericks is a co-founder of Strive Asset Management and a former Anheuser-Busch executive. Every day it seems that another iconic American brand has marched head-on into the furious buzzsaw of public controversy. Last month, Bud Light's sponsorship of transgender activist Dylan Mulvaney sparked massive customer backlash. Continue. Now, Target is the subject of boycotts after releasing a line of women's clothing intended to be worn by biological men with tuck-friendly construction and extra crotch room. The company saw their stock prices plummet and billions of dollars of value erased almost overnight. They're not alone. Nike, Calvin Klein, North Face, Even the Los Angeles Dodgers have been criticized for wading into America's culture wars. What is going on? Why is that companies that were once happy to sell clothes and beverages and nostalgia to Americans of all political stripes are now appearing to take sides in contentious political fights? The answer is simple: follow the money. As an executive at Anheuser-Busch for more than a decade, I witnessed how the calculus of running a major corporation has been hijacked. So he's explaining to you why this is happening. It's why I left. No longer is the pursuit of the almighty dollar within the bounds of morality and the law the sole purpose of so many America's top companies. Today, the country's greatest enterprises have been repurposed into vehicles of social change. Allow me to explain. Target and Bud Light are publicly traded companies, which means that ultimately it's their investors, aka Wall Street, that's calling the shots. Enter BlackRock, State Street, and Vanguard, the three largest and most influential financial institutions in U.S. history. They're known as the Big Three on Wall Street, though many Americans have never heard of them. These three companies control more than $20 trillion in assets, almost none of which is their own. Rather, they manage the money held in everyday Americans' retirement accounts, pension funds and mutual funds and investment accounts. So here's the $20 trillion, right? Everybody thinks that these companies are worth that much money. That $20 trillion is actually your money. So if you take a look at your 401k that you have with your company, that you know your company's matching every year or whatever, take a look at what mutual funds and what ETFs you're invested in those. Chances are it's State Street, it's iShares. I believe BlackRock is iShares, and then a lot of Vanguard index funds and mutual funds. So your money is being used to push all of this. And I'm going to get into how you can change that and how we can change that. The Big Three influence is staggering, but if they were managing this money simply to make more money, there might not be an issue. They're not. The Big Three are proponents of what's called stakeholder capitalism, which is a belief that businesses should be run not only to increase value to shareholders, but to serve all stakeholders, including government agencies, activists, and non-governmental organizations, which is wrong. Because companies should be run to increase value to their shareholders and not all stakeholders. That doesn't matter. If you are investing in a company, you are investing in that company and you're expecting them to make more money and then returning that money to you. That's what investing is all about. But it's slowly being changed, but we can do something about it. Continue. Continue. Stakeholder capitalism is distinct from traditional shareholder capitalism, which contends that companies have one responsibility: generate profits for the individuals who own shares in the company. The stakeholder movement has been around since the 1970s and has even earlier philosophical roots, but it truly began to gain traction in American investment circles only about 5 years ago. 2019 was a turning point. That year, the Business Roundtable, which a group of CEOs from America's largest companies adopted a new statement on the purpose of a corporation, declaring that all companies share a fundamental commitment to all of our stakeholders to promote the larger social good. 188 American CEOs signed on. Among them were the CEOs of Big Three and other large financial institutions like JP Morgan, Bank of America, and many other companies, including Target, Disney, and Coca-Cola. Bud Light, it should be noted, is owned by a European parent company and is ineligible to participate, but nonetheless, it has been influenced by this new vision of purpose. Continue. The Big Three began to issue guidelines on how they expected their portfolio companies to honor this commitment by implementing so-called environmental, social, and governance, or ESG targets and scores. To encourage compliance, the Big Three uses their power as shareholders to influence who sits on corporate boards. So those companies, they hold pension funds, they hold your 401ks, and what they do is they issue proxy votes. So if you don't vote yourself on who sits on the board and what kind of policies these companies are going to adopt, then those companies are going to vote for you in your stead for your shares. And so that's what they've been doing. That's how they've been forcing people onto company boards, etc. So if you invest, let's just take Coca-Cola for an example. You own $1,000 in Coke. You own 1,000 shares in Coca-Cola in your investment fund. You own 1,000 shares, which means that you have 1,000 votes. So if you don't go in and you don't vote yourself and you don't find out if you can vote for yourself, because some mutual funds don't let you vote. So what you need to do is find out if you can vote for yourself with your 401k in these individual companies. And so you have 1,000 votes. So if you don't vote, that company is going to vote in your stead. You're going to use them as a proxy. So they will vote for you, and they will vote for whatever they think is best instead of you voting. So that's what's been happening with a lot of these companies, but it has been changing. So in 2019, all of this started. 2020, it was pushed heavily. 2021, even more. 2022, they pulled back. And then this year, they've pulled back even more because they see the backlash that it's causing. So a lot of these companies aren't even mentioning ESG in their letters to shareholders anymore because it's become such a dirty word, and because it's causing issues, they're pulling back. They're still doing things, but they've pulled back on the language. And so what you need to do is you need to go to your 401k, you need to go to your mutual funds, you need to take a look at your investments, and if you invest regularly, what you'll do is you'll get emails, or you'll get in the mail, you'll get a piece of mail that says vote on the annual shareholder meetings for Coca-Cola, General Electric, whatever company you're invested in, and you can go online and you can vote. What they do is they issue what's called proxy materials. You can pull that up, you can take a look, and it'll show you exactly who's going to be on the board. It'll show you exactly why they think the executive compensation should be what it is. And all of those things, that's what they'll list on that proxy statement. And so you can go through and you can say, no, I don't want this person to sit on the board. No, I don't want this person to sit on the board. And even though they might get on the board, you're voting. You're doing your part as a shareholder. As a shareholder, you actually own a piece of the company. And that's what I think is so beautiful about investing, is that you're not just out there to make more money. You actually own a piece of this company, and so it should be important to you what that company does, because what happens at those annual meetings decides the trajectory of that company. And so it's important for you to vote. It's important for you to take a look at their materials and see what they're doing in the future, because that'll decide whether or not you're going to keep investing in that company. And so you should take a look at it, take a look at the proxy materials, and vote when you can in these companies. All right, continue. Sandra says, time to do a little work instead of just sitting back. That's right. You are a shareholder. You own part of that company. And so it's your duty as a shareholder, no matter how small it is, because some of you, somebody might just own 1 or 2 shares in Apple. So you only have 1 or 2 votes. Somebody else owns 1 million shares in Apple, but it doesn't matter, because if there's 1 million people that own only 2 shares, then they're going to outdo whatever that large organization wants to do with their votes. So if there's somebody that they're putting on the board that's going to push the company in a direction where profit for shareholders is no longer important, but what's important is pushing these culture wars, then you can keep them off the board. So make sure that you vote. Make sure that you do your part as an investor in these companies. It's not just about making money. It's about making sure that these companies do what they're supposed to do. Make money for you as a shareholder. All right, let's go to the next article. Target market capitalization has fallen. Investment firms like BlackRock and Vanguard are forcing companies like Bud Light and Target into woke marketing campaigns. So yeah, this is what's happening because of those ESG goals. Basically what they're doing, to summarize this article. Because of those ESG goals, they're forcing those companies to do what they want them to do. But if you say no more, and you say, okay, if they're going to do that, I'm going to take my money out of BlackRock and Vanguard, because chances are the same funds that Vanguard and BlackRock have, another company has them as well. They might be on a smaller scale, but they have the exact same companies. They have everything basically side by side. If you line those 2 funds up, are exactly the same. So you can take your money out of BlackRock or take your money out of Vanguard and invest them in one of these other firms that is not forcing companies to do stuff. And if you keep doing that, I guarantee you they're going to stop doing what they're doing because they don't want to lose money and they want to continue managing the $20 trillion in assets that they have. If they start losing it, they'll change. Continue. We can go to the next article. Next article. Oh, there we go. So this is what you can do so you can take a look at, go to BlackRock's website and take a look what they're doing. Now, I combed through this website and I couldn't really find a lot of things on ESG except for what BlackRock itself is doing when it comes to their organization. But this is sustainability at BlackRock, our fiduciary approach to sustainability and the low carbon transition. So this is what they're doing. Our investment approach is informed by 3 principles. Can you scroll down? Client choice, we start with the client. No, you don't. Continue. Or scroll down. Performance, we seek the best risk-adjusted returns within the mandates clients give us. See, that is huge. So they say within the mandates that clients give us. But who gives them clients right now? Who gives them mandates right now? The mandates are given by people that actually go out there and vote, that actually go out there and tell them, this is what I want to do. And the majority of time, it's not people, people like myself. I'm not going to do that. But it's time that people like myself do that, where they tell them, listen, I'm not a big fan of this environmental social governance stuff. Some of it is okay, but to push for a net zero on a company that at a great financial cost is going to hurt me as an investor, so we're not going to do that. And so if the clients mandate it, go back to the website. So if the client mandates that what's most important is a shareholder return, or what the return is to the shareholder, then that's what they're going to end up doing. Scroll down. Research. We underpin our work with research, data, and analytics. If the research, data, and analytics that's underpinned is that what's important is making money for the shareholder, then that's what they're going to do. But right now, the people that are the loudest when it comes to investing are the ones that are pushing all of these things. And so these companies, if that's all they're getting, if that's all the data they're getting, they're thinking, oh, this is the majority of America that wants this, when it's not true. We apply those same principles to sustainability and the low carbon transition. Let's go to the Vanguard website. We have a clear mandate to safeguard and promote long-term shareholder value at the companies in which our funds invest. So this is what you can do. You can go to these companies, go to Vanguard.com, corporate.vanguard.com or BlackRock.com, and you can take a look and see what they do. Because chances are, if you have a 401k or if you have some sort of IRA retirement account, that your money is invested in one of these companies, that one of these companies, you're invested in one of their funds. I'm invested in one of Vanguard's funds. So what I need to do is I need to figure out whether or not I have voting power when it comes to that fund, which I do. And then I need to vote when the time comes to vote, I vote. I go through every single company I own, I go through their proxy materials, and I vote. And I pick and choose who sits on the board or who I think should sit on the board based on their experience and based on what they're going to bring to the table. And most of the time, I vote for people who I know are going to bring the most shareholder value. Not stakeholder, shareholder value, because I'm a shareholder. So this is what you can do. You can go to these websites, take a look at them, and see what they stand for. If you don't like what they stand for, contact them. Be like, hey, listen, I don't like this. And if they say, okay, we're still going to do it, then say, okay, that's cool. I'm going to pull my money out and I'm going to put it in an investment fund. I'm going to put it in a company where this is not 100% important. What's more important is the shareholder, and what's most important is me as the client, and not whatever the agenda is that some CEO meeting has decided is going to be. Continue. Who owns Vanguard Group? So Vanguard has a fairly unique structure for an investment management company. The company is owned by its funds. The funds are owned by the shareholders. The shareholders are you and the shareholders are me. If you own Vanguard Index Fund, if you own Vanguard funds, you own the company. So you can call for change in that company. Continue. Write them a letter. Write them a letter to their go to their investor relations, their shareholder. They've got like a liaison. They've got an address there. Write them a letter. Good old-fashioned letter. Tell them, listen, I don't like this. Stop doing it. And if a lot of people do that, then they'll start making a change. Continue. Go to the next, not the next article, but the next slide. Vanguard Group is a second largest investment firm. I think they have 6.5 trillion in assets under management. I believe that BlackRock had 8 point something. If you go to the BlackRock, the screenshot I sent from Wikipedia, this was the latest one that I can find. BlackRock is an American multinational investment, $8.59 trillion in assets under management as of December 31st. That $8.59 trillion is not BlackRock's money. That's your money that they're holding. That's your money that they're doing things with that they shouldn't be doing. So you're the one who owns the money. You're the one whose money it is. So you tell them what to do. It's your money, and it's time for shareholders who have been passive for way too long to wake up and do something about it. And we can do something about it. Continue. Next one. ESG, and there's already things happening. ESG blowback. Exxon, Chevron investors reject climate measures. Shareholders' votes, along with others in Europe, deal a blow to activists. So here, Exxon and Chevron, which last year I reported on Exxon, they put 2 people on their board who were going to push this ESG agenda hard for Exxon. But that's all, there's a blowback to that now. That's all being rejected. Exxon and Chevron investors have realized that you have to vote and you have to tell them, listen, going carbon neutral or going net zero for emissions, that's not possible for an energy company without spending billions of dollars on carbon credits every single year. And so we have to do something about it. We have to tell them, no, you're not going to spend our money as shareholders. What's supposed to come back to us as dividends, what's supposed to come back to us as share buybacks, you're no longer going to spend that. You're going to invest that, continue to invest that in the company to grow the company, which then again grows our share value. Continue. An investor-driven climate change push at some of the world's largest oil companies has stalled out. On Wednesday, Exxon and Chevron shareholders struck down a raft of proposals urging the companies to cut greenhouse gas emissions derived from fuel consumption, put out new reports on climate benchmarks, and disclose certain oil spill risks, among other initiatives. The votes were abysmal for climate activists. All but 2 of the 20 shareholder proposals for the 2 companies garnered less than 25% of investors' vote, according to preliminary results, with some performing much worse than similar proposals put forward last year, because people are waking up. People are waking up to the power that they have as an investor, and they're voting. And so that's what's important. So us as Check the Market, as a Check the Market family, that's what we need to do. If we're investing, we need to vote. If you have something that you hold long term, vote when it comes to these proposals, and tell these companies and these activist investors that's not what we're doing. A lot of these activist investors are putting forward proposals and they own less than 100 shares of these companies. Less than 100 shares. So Susan says, this is troubling because my new job has Vanguard for retirement. They offer matching funds up to a certain percentage. Yes, but Vanguard is not, what they're doing with your money, yes, is not right. But the reason they're doing it is because people are telling them to do it. But if you write them and you're like, listen, I don't like this, or what you can do is, if you invest in a Vanguard fund, make sure that you can vote on your shares. Make sure that you can vote whatever funds they're telling you. You can pick from, this basket of 20 funds. Make sure that you have voting power in those funds. Because Vanguard is going to look at that data and they're going to see, oh wow, our investors don't want us to push forward with these things, so we're going to pull back, which they already have this year. Vanguard and BlackRock have already pulled back. I believe that neither one of them in their letter to shareholders mentioned ESG once. You're welcome. Continue, next one. I believe I've got one or two more. Inverse Kramer, technical analysis bros be like, as you can see here, we have a perfect breakout spot. Yes, that looks familiar. Mine are never that complicated. I keep mine fairly easy, but there are some posts on Instagram that I see where, or Twitter, where it's exactly like that. Continue. Company's new cause, dodging the culture wars. Executives rethink if and when to weigh in on potentially divisive issues, fearing backlash from all sides, and develop crisis plans in case things go wrong. So companies, this is from the Wall Street Journal, which is a centrist newspaper. It's by no means conservative, by no means liberal. It's right smack dab in the center. Good article by them. Let's see it. In May, clothing company The North Face released a video for Pride Month featuring drag performer Patagonia. The ad was similar to the one the performer appeared in for the outdoor apparel maker a year earlier. The reaction was not. Within hours, calls for a boycott of the company spread on social media. The North Face wants to be the next Bud Light, one user wrote. Aren't you supposed to learn from others' mistakes? CEOs spent the past few years adjusting to a world in which investors, customers, and employees expected corporate leaders to align themselves with social causes. This is a wrong statement. CEOs spent the last few years adjusting to a world in which investors, customers, and employees. Investors, the only reason why they did that is because those investors, customers, and employees are the only ones that spoke out. But now now the silent majority is speaking out and they're saying no more, and that's why they're pulling back. Expected corporate today, that has made companies targets in the US culture wars, where one step can turn a social media storm into a corporate crisis that cripples businesses and wrecks careers. Continue. Some CEOs are rethinking how or whether to weigh in on sensitive political social matters, with trans and other LGBT issues particularly in the spotlight. At PPG Industries, a Pittsburgh maker of Glidden paint, coatings, and other products, Chief Executive Tim Knavish, or Navish? I think it's just Navish, asked senior leaders at the company earlier this year to review its process for engaging on polarizing topics. Why do you even have to review your process for engaging on polarizing topics? Just don't talk about it. You're a company, you're a publicly traded company, and your sole purpose is to make money, give money back to your shareholders, and sell products. That's a purpose of an organization. So many political and cultural issues have ensnared companies, Navish said, that he wanted the company to have a robust plan should it need to respond. There's no pure algorithm to put all this stuff in a spreadsheet to tell you what to do. Yeah, do nothing. Just don't say anything like it used to be. I think if these companies go back to saying nothing, then the tribalism that is, that politicians are causing here in the United States is going to go down. That's for sure. Because if companies aren't pushing it, it's going to get more quiet, and then the tribalism is going to go down. It'll just be the politicians that are pushing it again, and the majority of them aren't liked anyways. All right, let's finish the article. PPG uses an internal scoring system to determine if and when it makes sense for the company to comment on matters that may offend some of its customers. You're always going to offend somebody. Whatever you say, I'm sure this episode is going to offend somebody. You're always going to say something that offends somebody. And if you live your life trying not to offend anybody, you'll be developing wrinkles at 25, that's for sure. We run a business, we don't run a political organization, we don't run a religious organization, and we don't run a social organization, Navish said. However, we recognize that we operate in a society. We hire employees with opinions and views. We work with customers that have opinions and views, so we have to take all of that into account. Yes, let's take a look back at the 90s or the early 2000s. You also had customers with viewpoints and employees with viewpoints, and everybody got along, mostly. So let's do that again. That's what I say. All right, well, that was it for today. Let's take a look at the market one last time here. Dow Jones down 37, S&P down 4, NASDAQ down 29, trading fairly flat. The Russell 2000's up a little bit, actually. Oh, and I just got a breaking news update. PGA Tour agrees to merge with Saudi-backed rival Live Golf. Interesting. Look at that. So the PGA is merging with Live Golf, which was some serious drama if you're into golf. All right, so that is it. Remember, you are an investor, you're a shareholder, so vote. Make your voice heard at these shareholder meetings. If there's some that are in your city, you can actually attend some of these, and you can ask questions there and make the executive staff feel extremely uncomfortable by asking some uncomfortable questions of them. All right, if you'd like to invest in Revival today, which investing in the kingdom of God is always the best thing that you can invest in, here are the ways that you can do that. revivaltoday.com/give, Cash App, Venmo, PayPal, hashtag donate on Facebook, and text RT to 50155. You can give by cryptocurrency by scanning that QR code. Show Gary Gensler that we still have cryptocurrency. You can also set up your free will. We have that for our partners and for our friends and family here at Revival Today. You can go to churchwill.com and you can set up a free will. You can mail your offering. P.O. Box 7, Prosperity, Pennsylvania, 15329. Oh, what are we doing for an offer today? No. Let's do The Psychology of Money. Perfect. Psychology of Money by Morgan Housel, an excellent book. I have it on audiobook and I've listened to it twice now, and I think it's an excellent book, so we'll give that to you as a way of saying thank you for investing in Revival Today. If you're anywhere in the Louisiana, Texas, Arkansas, what else is around there? Mississippi, Alabama. Faith Church in Ruston, Louisiana. Evangelist Jonathan is going to be there from June 4th through the 9th, so he'll be there tonight and at 10 a.m. today, so that's in just about an hour, 52 minutes, and 7 p.m. tonight through Friday. If you can make it out to those meetings, do it. Take some time off this summer and head to one of those meetings. Also, our July extravaganza, what no eye has seen, our international camp meeting, Revival Today. Sign up, RTC register. Come for this week. It's going to be absolutely powerful. Some of the greatest men of God from around the world are going to be here at Revival Today Church. So make it out for that. What no eye has seen, Revival Today International Camp Meeting. Register at rtcregister.com. They're going to be powerful meetings, and we're all looking forward to them here at Revival Today. What else do we have? Any more announcements? Rain Ladies Night this Friday at 7 p.m. here at 107 Patton Drive. So if you're a lady, make it out to that. And I believe that's it. Church in the City, Rowlett, Texas. This is next week, June 11th through the 16th, Sunday at 7 p.m. and Monday through Friday at 10 a.m. and 7 p.m. So if you're anywhere in that area, make it out to those meetings. In Rowlett, I believe that's close to the Dallas-Fort Worth area. Well, thanks for tuning in, everybody. Go out there and make some money. And remember, you are a shareholder. You have a voice. You have a vote, no matter how many shares you have. And use them, use that power, and together we can make a change in corporate America. Thanks for tuning in. I will see you all next week.
No eye has seen, no ear has heard, nor has it ever entered into the heart of man what God has reserved for those who love Him. In Bible-type love, hot, fiery love for God.
The eyes of unbelief see nothing but difficulty and defeat. The eyes of faith, yeah, there are giants in the land, but they're unprotected. They're merely bred for us. If the Lord is with us, we'll go in and possess it at once.
No matter where you go, God will surround you. The Lord will go before you. God will protect you. No harm and evil will come nigh to you.
God will give you power over the devil and power over sin and power over your flesh.
Tell the whole world over and over and over and over again that Jesus loves you with all his heart and he wants to save you and to save your life.
You understand? Jesus is coming, and sooner than most of you people think he's coming. I'm not just saying that to get you excited. I'm telling you, he's coming.
Let God be true and let every devil be a liar. Clap your hands, all ye people. Shout to the Lord.
He's able to give me a child. He's able to heal my body. He's able to provide for me.
2023 will be the year that the Church of the Lord Jesus Christ comes alive in the United States of America. I'm looking at the people right now that are going to make an impact.
You're going to leave out of here today seeing life through the lens of faith.